Let's get in a fundamental guest on the show. We've got Sandeep Sabharwal, who's Chief Executive Officer for the PMS business at Prabhudas Lilladher. He joins us on the show from Mumbai. Sandeep, to begin with, looking at sectors in the market today, what's looking like an attractive buy for you at the moment?
Hi, good afternoon. I think overall looking at the markets, what I believe is that we are today in the process of in the midst of a global risk-off trade, and as that plays out, I think we should see the markets correct further by around 4 to 5% over the next few sessions. And as that happens, I think what that will do is that will make the current valuations, which are as it is attractive, even more attractive for some sectors. So I think broadly at the top end of the large cap space, I would play private sector banks and NBFCs. So I think that space looks very good because the results have been good. The balance sheets are well placed, non-performing assets are well under control, and these private sector banks and some of the NBFCs are well placed to ride the up move as that plays out. Secondly, I think the entire four-wheeler space in terms of autos looks attractive, so I think that's another space we'll play. And thirdly, I think in the large cap space we are looking at capital goods stocks selectively, where valuations are very cheap. Their triggers are not imminent and are not immediately visible, but the valuations are so cheap that as things play out going forward, we'll see returns coming through in this sector.
Now, Sandeep, BHEL is a stock that's taken a severe hammering in past sessions. It's climbed today in trades. Do you believe that BHEL is today at attractive levels enough for you to buy?
I think BHEL as a stock doesn't really have too many triggers for it going forward. However, the valuations are extremely attractive. So I think for value investors, it could be a good play where they could buy it for a trading standpoint. However, I think for a long-term investor who's actually looking at growth stock, it's very difficult to see growth coming through in this company in a significant manner over the next couple of years. So I think the downside is limited and the upside is limited. So I think people need to play it in that range.
Right. What about the IT pack right now, Sandeep? What is the call there? Because one opinion of the market, of course, is that, given the slowdown in earnings and the guidance given out by Cognizant, there's pressure on the BFSI vertical, and that would pose to be a big challenge. There's another opinion which is contrarian, where you're looking at the rupee depreciating, so you're focusing more on export-oriented stories. Which opinion do you kind of concur with?
I think in the IT space, in the large cap universe, we are seeing extremely divergent valuations today. On one side, you have a company like Infosys which trades at cheaper valuation. On the other side, you have a company like TCS which is at higher valuation. And obviously, the delivery in terms of their results and the outlook also is different. And the other side is that the rupee has come down over the last 1 month since the end of the last quarter. However, I think going forward, my outlook on the rupee is not so negative. So I believe that current account deficit will actually come down this year. And in terms of capital flows, the things don't look so bad post GAR postponement. So I think the rupee a year from now should be higher than where it is today. So I think that obviously could be a pressure point for IT companies, although historically we have seen that IT companies have managed rupee appreciation pretty well. However, this time I think there are demand constraints, so in that scenario it might be slightly difficult to handle. So I think taking things overall in perspective, I think one has to buy stocks in this sector which look cheap in terms of where they are placed, but one can't expect a very huge up move in this sector, at least in the near term.
Right. Also, from the rate sensitives, the auto pack particularly, given the earnings that came out, which segment of autos would you be most bullish on?
I think four-wheelers are much better placed than a two-wheeler pack. Two-wheelers have grown aggressively over the last 2-3 years. And this year I think the growth rates are slowing down and the competitive intensity is also increased. So I think that will put the pressure, and these stocks have been reasonably owned among investors. So I think that will continue to put some pressure on these stocks. On the four-wheeler space, I think valuations continue to be attractive and demand drivers still continue to be there. And as interest rates come off, which I think they should, as inflation in my view will surprise on the downside going forward as the pressure on the rupee reduces and the full impact of the global commodities correction comes through into Indian inflation. So I think as that happens, I think the four-wheeler space looks very well placed. Secondly, what will also happen is that last year we saw a lot of cost pressures on these companies because of higher input costs, and that pressure should not be there this year.